Hi, Bill Bodnar here from the Mortgage Market Guide. Thanks for tuning in to the Mortgage Market Guide recap. So this was one of the headlines earlier this week. Mortgage rates in that previous week hit a 10-month low. And here we are again this past week. Rates are actually improving further. Now, remember, in order for rates to improve, it usually has to accompany some sort of bad news. And so, yes, we did get some bad news this past week. And this was really the headline in our eyes that really changed everything. And we need to watch to see if this is a trend. So global growth fears is something that the Fed mentioned in their last meeting. And it's one of the reasons why they said, hey, you know what, we're going to take a look at things as it relates to interest rates, probably not going to hike nearly as much, if at all. And if need be, we will do something with the balance sheet, that runoff. Maybe they'll slow down that pace of unloading that balance sheet. But right now, the data points coming out of Europe recently have not been very good. And we're seeing German Bund, who is, obviously their strongest country, at the lowest yields in 2 years, something like 15 basis points. And here we are at, 265 or so on our 10-year note. So there's really a disconnect. When you hear America being the cleanest shirt in the dirty laundry, there's your example. I mean, we really are humming along while other countries kind of hover near recessionary kind of levels. So the Fed is off the table in our eyes for 2019 unless there's a material change as it relates to economic growth and inflation. And so next week, we are going to receive some inflationary data. You need to pay attention to that closely. But I think the bigger story here is let's watch real closely as what's going on in Europe. Because if Europe starts to slow, when we get more signs of that, boy, I think that we're going to see rates, which are right now, again, at 10-month lows, maybe test rates not seen since 2017. So this is a chart you can see here, recently from a technical basis, we hit this ceiling here and we pulled back. And that was the last jobs report. And then on the next jobs report, we hit this ceiling and we pulled back. So, there has been a limit to how good things can get here because simply our economy is doing very, very well. I mean, we're seeing 300,000 jobs created in the last jobs report. That's a big number. So it's going to be a limit to how low our rates can go. But we're watching Europe, kind of suck our yields down. So again, I think we should enjoy what's in our hand, especially coupled with the backdrop of a good economic backdrop. Makes for a Goldilocks situation for us in the housing and mortgage business. Hope you have a great weekend. We'll be back at it soon. Bye for now.